Shelby Elias, as promised, from financewithshelby.com, and United Wholesale Lending is here. Hi, Shelby.
Hello, thanks for having me.
How you doing, man?
I'm doing good.
Good to see you. First thing Dawn notices, you're way too relaxed.
Yeah, I like it. He's chill.
You guys make it easy.
Thank you. We obviously promoted this on social media yesterday. You're prolific on social media, and here's like the main number one comment we got right away with knowing that you were going to come on. It's impossible to get a house if you're a first-time home buyer and don't have a briefcase full of cash. True?
True.
True?
No,
that's your bad.
Not completely true. But honestly, it is tough. And what I would say is you really have to align yourself with a good real estate agent. A lot of people, everybody knows a real estate agent, right? There's part-time real estate agents, there's full-time real estate agents, and I don't think that people are weighing enough upon their realtor, right? Finding somebody that's involved in the market, finding somebody that is active in the market and has a ton of experience.
So what would they look for to prove that, to vet that's the kind of realtor? Because people lie and they promote themselves.
Yep. So check them out. Look them up on Instagram, online social media. Get a referral from a friend. Find a full-time real estate agent. You should be able to vet that out on your own, right? So that's the first indicator. Find somebody that's full-time, fully invested in the market, somebody that maybe has a lot of connections, right? There's a lot of people that are part-time. They don't have that many connections. And unfortunately, in real estate, it's kind of like a good old boys club, So, one agent gets a phone call from, another agent, and then they're like, oh, hey, guess what? We have 5 offers. And, so there's like some insider information going on, and you have to be actively involved in the market to do that. Now, another thing that I would say is you have to be sure that you know what a strong offer is, okay? So what a seller wants is they want comfort, right? They're packing up their house, they're moving, they want security in your offer. So they're going to first look at how much are you putting down, and if you're putting 5% down, it doesn't mean you're out of the running, but now what you have to do is ask the seller what they're looking for, right? And the seller will at that point come back to you and say, okay, this is what we want. I want a non-refundable deposit, right, to make them feel comfortable. Or I want rent back after I close, right? It might take me a long time to find another house. Can you give me 120 days in my house so then that way when I sell to you, I have enough time to move?
So
right?
is that the way we offset the lack of a briefcase full of cash?
Exactly.
You find other things lifestyle related that the seller might want.
Yes, exactly. And ask those questions.
Yeah, because maybe someone with the load of cash doesn't want to do those things.
Exactly.
But you do, and they like that.
Well, we had that. Remember that story, which actually kind of like spearheaded. I think it was the first day or the second day you and I had lunch. We had done the story about the Citrus Heights home that got 122 offers on the first day.
Jeez.
But you remember they didn't take the highest offer because they're moving to Idaho and they needed some type of placation from the buyer that they chose. They chose a buyer that was more willing to say, okay, look, fine, I'll wait longer or I'll pay. But they took a lower offer for exactly the reason that you're talking about.
Yes.
But this is a nutty market, though, right? I mean, it's out of control.
Absolutely.
And a lot of here, in fact, you know what? This is a question I asked you. I think the second time we had lunch together. Chris says we're getting into traditionally peak home buying season, but the current market's unlike previous trends. Based on what we're seeing, do you think the market will continue to trend upward into summer, or does it look like it's starting to level out? Another way of asking, are we headed for a crash? Where's this housing market? Because it is, you would agree, it's through the roof right now.
Totally, yes. It is really high, but it's supply and demand. That is the main driver of this. So how I like to explain this is, I think me and you actually talked about this before. And back in 2007, 2008, when the market crashed, everybody that was in construction, they actually got out of construction. They were no longer doing construction. Anybody that was in college, none of them wanted to get into the construction field, so they all abandoned construction. All the home builders were all out of business. So, but the demand still, there was all these millennials that were coming into the market still, wanting to buy homes. And what kind of kept the market at bay was the fact that millennials were kind of okay, not buying homes for a while.
Right.
And there was kind of a shock there. Well, now with COVID, right, it was kind of the catalyst of everything. It was the straw that broke the camel's back. Now everyone is wanting to buy homes. There's not enough inventory on the market. And that's what's driving this frenzy of home buying right now. So,
Which and when you told me that story, having lived here for 22 years, it didn't make sense to me until you said it, because my vision of the greater Sacramento area, and this is true in Reno as well, is that there's always new homes being built, and there's so many homes, and how could there be? And so you need to walk through the process of understanding we literally have a home shortage.
Yeah.
And that's what's driving the market. And then we have the influx of the Bay Area people to both Northern California, Northern Nevada, trying to escape that area. And they're the ones also that are bringing in these suitcases of cash.
Yeah.
And also often outbidding people that have been living here their whole lives and they just want to move up. There's no way to stop that, right? I mean, how do you offset that other than the plan you gave us before?
Yeah. I mean, one thing that you could do as a buyer yourself is tell all your friends what you're looking for, right? Go out and tell people. There's a lot of deals that are being done that are completely off-market transactions, and people understand, right? People that live here in the greater Sacramento area, they want their friends that live in the greater Sacramento to be able to stay here. So, if you start telling your friends, you find a good real estate agent, you understand what the seller's looking for, it's really going to help your chances of getting your offer accepted.
Do you know what? I totally forgot about this, but when you brought up, as Rob said, the suggestion you first came up with of the other things maybe you're willing to do, I totally forgot this, but way back when, and maybe this was 2005, I don't know, but my husband and I were selling our house. And there were a few off, not 22. I know it was not like now, but there were like 5 or 6, and there were a few of them there where the people had cash, but they were kind of just like, yeah, we have the cash, whatever. And the feeling we got from them was somewhere along the line they might find something else they like because they have all this cash. They're gonna bail, right? And there was this other couple, was this mom and her it was a mom and daughter, and they're older, and they even had like a couple other things that had to go through, but they were so committed and in love with our house that we were like, you know what, we're just gonna go, and they were willing to do the other things too, because we had other stuff in there to make, and I forget what it was, because so long ago, to make us feel better. And we're like, well, screw the other ones. People that were crazy, right? Because they're just like, they have all this cash. They're just going to give it. But we're like, just don't feel right. They're kind of like, I have all this cash, whatever. I might find something better, or it doesn't really matter to me as much. So I forgot about that. And it did work on us that they were willing to do some other stuff.
It does. It's so much emotion that's involved in homes on both sides. Dawn's still on the seller side. And of course, we all know the emotion of when you find the house that you love and then you're married to it and you want to do everything you can to get it.
Yeah.
We got this email. Phone number is 888-989-9811 with Shelby Elias from financewithshelby.com. We just got this note. Says, we just refinanced our home with United Wholesale Lending, and oh boy, the process was so easy and quick, unlike most mortgage companies.
Nice.
Oh, that's great.
Always good to hear. You have the target date of 17 days, right? Start to finish?
17 days on a purchase, yes. And that, again, is going to make your offer more appealing to the seller, for sure.
Depending on what they want, because a lot of them, they're like 30 days. And so if they get an offer that's similar or maybe a few $1,000s less, but you can 17 days, can you really do this? And then they'll choose that. All right, so we got this question from Kay.
Hey, Kay.
Says, should I sell now or wait? I started planning on moving from California to another state back in October of 2020. The plan is to move in April of 2022. The housing market's going crazy. My question is, should I sell now or wait it out and sell in April of 2022? I predict the values will probably not be able to handle this for a lot longer, but 10 more months?
I think that you're safe 10 more months. I think that there's still a lot of runway here, but you have to analyze that to where if it does change, does that completely wreck all of your plans, right? You don't want to risk it, but I definitely think that there's more runway here. The supply and demand issue, it's not going to be solved in 10 months.
So it's a seller's market for at least, a year, 2 years?
How long
does it take to build homes?
Exactly. I mean, how do you solve that problem? Now, nobody has a crystal ball, right? There could be some crazy, there could be another pandemic or something crazy that happens. It completely wrecks the market. Something completely out of our, scope. But what we know right now is that this market is because of supply and demand.
One of the many things that not in a sexual way, attracted me to you. Not that there would be anything wrong if it was sexual. Was that you're not afraid to answer everything, and that you do it so confidently. I mean, most people would not sit here and say, you gave the qualifier that's obvious, another pandemic, something's out of our control. Other than that, you're like, no, this is absolutely what I think and know. And by the way, how long have you been doing this?
15 years.
And you're a punk, right? Aren't you like in your early 30s or something?
Yeah, 37 years
Wow,
old.
good for you. That's amazing.
By the way, that's another thing about you on Instagram. You and your family and all that stuff.
So, yeah.
It's so great.
cute.
It
Yeah.
personalizes you, and having gotten to know you, I know that you're a real guy, and you're big with friends and loyalty and all that. And those are all things that I think are just fantastic.
You can tell you're doing what you love.
I
And
am.
that's a
I'm
big
super
deal.
passionate about it.
Yeah.
And, there's life beyond mortgage. I enjoy my life, right? So,
Well, yeah,
important to
when
me.
I very first met you, I think I spent like the first 10 minutes barely saying a word because I was like, is this guy a shyster? Is he just like a charismatic pastor because you're so charismatic?
Yeah.
But then I thought, well, wait a minute, I'm charismatic, so and I'm not screwing people over. Phone number is 888-989-9811. Hi, Jared.
Hey, Shelby, I had a question for you. I purchased my house back in '08 during the crash, and then with the COVID stuff, fell behind on some bills, things like that. Was wondering if you could help. And then I heard there's a program that they're offering, or if it's the government or something for that nowadays, and trying to get rid of that stupid mortgage insurance and then just maybe get a better finance rate.
yeah. So have you been late on your mortgage or just on other bills?
Yeah, so late on them a couple times. I mean, I'm catching up, getting back to normal, but...
So
and then also
if you've been late in the last 12 months on your mortgage, then what you'll need to do is you need to be current on your mortgage for 12 months before they'll allow you to refinance. Did you take advantage of the forbearance?
I'm sorry?
Have you ever heard of a forbearance program where they actually allow
No.
you? So that was something that they were offering. The banks were offering a forbearance program to you. It's unfortunate that you didn't hear about that because they would have allowed you to miss your mortgage payment during COVID.
Wow.
And they actually add that to the back of the loan, and it doesn't affect your credit score.
Wow.
But since he didn't do it, that's
Yeah.
That's
so he's got to get to the
You
12-month
Yeah,
point.
you got to wait 12 months.
gosh.
Yep, of not missing your mortgage payment. And again, remember that your mortgage is not counted late until it's been 30 days late. You're allowed to pay on day 21, 25 without penalty. It doesn't hit your credit until it's 30 days late.
So this is the other side of what you're doing too. I mean, what's going on in the market. So we talked a little bit about buying, which we'll get back to. But there's this all of this equity that some of us have in our homes. But there can be a fear factor about, oh my God, our house is worth 100, 200,000 more than what we paid for it already. But should we take that money out and stay? And what do you tell people with that question?
Well, you want to do it responsibly, right? So if you can actually take cash out, it's a great time if you have another investment for that cash. So if you're carrying credit card debt that has maybe a 25, 30% interest rate attached to it, you absolutely need to cash out, pay off that credit card debt, because a cash out interest rate right now is around 3.2, 3.5%. So if you're paying on these credit cards at 30%, then it absolutely makes sense. Another good avenue too is that if you have another investment or something that can yield you a better return, this is cheap money. You can borrow money at 3.5%, borrow that equity and reinvest it. Of course, you want to make sure that you're making good investments. Don't go out and buy a brand new car or, go to Dubai on vacation.
Yeah.
And especially if the market's going to continue to go up for the foreseeable future, because that's always the scary thing for a lot of people when they take their equity out is, oh my God, what if the value of my house goes down and we want to sell it someday, but there's no indication that's going to happen soon.
Yeah, but I mean, even if your house goes down, what's the worst case scenario? Hopefully your payment is fixed. We're giving 30-year fixed mortgages for the last 10 years. So hopefully your payment's fixed. Worst case scenario, your invisible equity that you can't even access anyways is not there. And it will come back. It always does. So you just got to ride the storm. But hopefully you can take some of that equity, reinvest it, take some of the equity, pay off your credit card debt, and put yourself in a better situation.
Hello, Jacob. Go ahead.
Hi, good morning.
Hey.
So I'm 26. I have no debt and a decent amount of savings. And I was wondering, should I just keep saving until prices go down, or should I try to get in now?
Well, it just depends upon where you're at in your life, right? If you're totally okay renting, right? Or maybe you have a really good deal on rent, maybe you're living with your parents, sure, maybe stack up some more money, sit on the sidelines for a while. But if you're already paying $2,000 a month for rent or $1,500 a month, you're literally throwing your money away. So the minimum down payment for a first-time home buyer is 3% down. Okay, if you have good credit, 3% down. Even if you have a 620, 640 credit score, you can still put 3.5% down. And if you ever think that you actually want to become, a real estate investor or have a real estate portfolio in the future, I always recommend people that for your very first home, think of that property as your investment, okay? Think about that property as a property that you can turn into an investment property. So start to build your portfolio now. So what you would do is you put 3.5% down on maybe a duplex. You live in one side, you rent the other side out. The other side is going to make the majority of your mortgage payment. And then you'll do the math and figure out, okay, well, when I move out of this house, then both sides will cover my entire mortgage payment. Okay, so that is going to work out as an awesome first investment property. And then what you can do is when you buy another house, you only have to save up 5%. And you're putting 5% down on the next house. And then you buy a little bit bigger house, you put 5% down. So you're kind of working the system, because if you were to do it the other way around, where you bought, your first house and you wanted to buy an investment property, that next property you'd have to save up 20%. And that's why a lot of people don't buy investment properties, because 20% down is a big chunk.
Let me dumb that down for you. You just got a free 3-minute seminar on how successful people think.
Yeah, that was amazing.
That's
amazing.
That is not how most people view that.
No.
And that you are thinking so many steps ahead.
Yes.
And that's why you are where you are today.
Beautiful.
And I know you're big in the investing side, which we're going to get to as well. I want to go back, though, because you made a great point. There's
great.
a lot of people that are paying more in rent than they would if they owned their home.
Correct.
Which takes us back to the I don't know if people understand how historically low these interest rates are.
Yeah.
I mean, I bought my first home in 1992, and I thought I was getting a steal at 7.25%.
Wow.
And you're talking less than half that right now, which is how people could literally own a home and pay less than what they're paying in rent right now.
Yeah.
I mean, and do you see those interest rates staying there?
And that's exactly why we're not in a bubble. If we were in a bubble, then the payments would be way off and people would be buying homes that they couldn't actually afford. But what the perfect storm has created was, sure, the home prices have gone up, but interest rates went way down and kept the affordability factor. So, yeah, I pre-qualify people all the time that are absolutely shocked. They're like, wait, hold on. I'm already paying $2,600 a month, right? And now this new I can own for $3,000. Like, wow, they're blown away. And that's why it makes so much sense to at least look into it, I think it's a great opportunity to buy still.
Phone number is 888-989-9811. You can email us, rad@radradio.com. We're with Shelby from financewithshelby.com. This is from Jay.
Hey, Jay.
Says, I'm trying to buy a house, and I went to my bank to get pre-qualified, but I was told because I started my business last year, I can't get a loan until my business is 2 years old. I'm making more money now than I was making when I was working for someone else. And that's after taking out my expenses. Is there any other way to get a loan, or am I stuck waiting for 2 years?
Yes, unfortunately, you have to wait 2 years. And what the reason behind that is because the banks want some security in your business. They want to make sure that, you start up a new business. They want to make sure that they can analyze at least 2 years of stable employment with your new business to make sure that you qualify. Now, there are loans called portfolio loans, and they have more lenient guidelines. What they will allow you to do is if you put more money down, then they're willing to lend you money, but it's going to have a higher interest rate. So there is an option, but I wouldn't recommend taking it. I would just wait out the 2 years and save up some more money. You're going to be in good shape when you do go to buy.
So he put a PS on his note that said, Rob, if I can't get a loan from a bank, can I borrow about $700,000? I'll pay you back. I'll get back to you, Jay. We got this from Sean.
Hey, Sean.
Says, I'm 29 years old, looking for my first home. I have not gone through any pre-approval with a lender at this time, but my question is, should I try to get qualified and buy now while interest rates are super low, or wait until the market goes down and get a comparable house for a lower price but at a possibly higher interest rate?
Again, how long are you willing to wait? You could be waiting on the sidelines for 3, 4, 5 years, and prices could continue to go up. So I would recommend get pre-qualified up front. At least you know where you're at. Mm-hmm. And then at that point, you can make the decision. And you know, who knows? What if it's only a couple more $100 than what you're paying now in rent?
And there's a lot of variables he's got going on in his brain there. It's almost stock market-y, but in terms of hoping for the interest rates and man, how long are you going to wait?
Yeah.
So talking about people that are renting and that their mortgage could be less. And I know a few people that are younger, and they're fearful of owning. We're like, with rent, if they need to, pick up and go, they can.
Yeah.
There's nothing holding them. If something out of their control happens with their job, whoop-de-doodly-doo, they're just renting. They could just pick up, find something else. Do you ever have people that have those fears, and what do you say to them?
Yeah. And, that's the best part about real estate is it's numbers, okay? So what you can do is you can look at the rents for that particular house in that particular neighborhood. You could literally go on Craigslist, look it up, and then you'll find security in that. And I do want to clarify, you're not going to be able to buy a house for less than your rent, okay? Come on, you're owning, right?
Yeah.
You got to pay a little bit more.
Yeah.
But it could be pretty close
Yeah.
to where it could be an insignificant amount. So what I like to do is I like to go and look up those rents and say, okay, worst case scenario, if you couldn't make this payment or something happened and you had to move out, this is how much you can rent this house out for. So what if you went negative? What if you went negative $300 a month? What if you went negative $500 a month? Would that crush you, or would you be okay? And a lot of the time, the answer is, I'd be totally fine if I came out of pocket $500 and I still own this house.
Nice.
Hello, Amber. Go ahead.
Yeah, so I bought my house in 2018, and I wanted to refinance to get rid of that stupid PMI, but I also have the opportunity to purchase a home with gifted equity in it, so I wouldn't necessarily have the 20% down, but I would have that equity, and I was thinking about buying that as a rental investment. Is it different interest rates for that, or how does that work?
Yes. So first off, you 100% want to get rid of that dreadful PMI. I hate it too. So you're going to refinance that property as your primary, and you're going to get rid of your PMI. Okay. So that's going to lower your mortgage payment. Hopefully you can get a lower rate. It's going to put you in a good position on your primary. The investment property, you can get a gift of equity. Okay. And that is going to have a slightly higher interest rate because it's an investment property. And again, what you want to do is you just want to analyze the potential rent for that property and look at the mortgage payment, and then you can see hopefully you'll cash flow, and it'll be a great deal for you.
We got this email from Jessica.
Hey, Jessica.
I have a question for Shelby. Can you explain the benefits of a VA loan? I'm looking to be a first-time home buyer, and I've heard your mortgage can be significantly lower with that type of loan, but I have not researched it in any way.
Oh, well, nobody knows a VA loan better than you, Rob.
That's true.
We helped you with yours. So VA loans are awesome. The main benefit with a VA loan is that you can purchase a home with zero money down, okay? And then we were just talking about that mortgage insurance. A VA loan has lower interest rates, no money down when you purchase, and no monthly mortgage payment. So the monthly mortgage insurance payments, that is going to, so there's actually no monthly mortgage insurance, lower interest rate, and zero money down. So it's going to produce you with a lower monthly mortgage payment on a VA loan.
By the way, you mentioned that I've gone
Great.
through the process with your guys, and you have such an assembly line of team members who contact you right away, tell you exactly what you need, then they hand you off to the next department. Mm-hmm. They make it so easy, and then you do this cool thing. And I don't know whether it's when we're pre-approved or whatever, but you send this nice little gift with it's a Yeti with your logo on it.
Hi, that's great.
And my wife wanted to know why we didn't get two of them since we're both on the loan. So I promised her that I would mention that while you were here.
Well, she's going to be pleasantly surprised because I got a good gift for you.
Well, it's
nice.
a very impressive little program you got going there, man. This is from Stacy.
Hi, Stacy.
Says, I'm in the process of putting in a swimming pool and a 600 square foot addition, which will be a master bedroom suite. I live in Sacramento County. I refinanced and got cash out approximately 8 months ago. My contractor turned me on to looking into a home style loan. I was wondering what's the catch.
Okay, so I'm not particularly familiar with home style, but this is a really good point. So there are a lot of contractors out there that there's these government programs, okay? And what they do is it allows you to get new windows and put it on your property tax and a new HVAC system. And I mean, I'll tell you what, I do construction too. I flip a lot of homes. The prices that they're charging because they're allowing you to go through this program. So an HVAC system maybe would cost you between $6,000 and $7,000. They're charging you like $12,000 just because you don't have to pay out of pocket. You put on your property taxes. So I would be very leery of any of those types of programs out there that are allowing people to finance through some government program, because the deals are just, it's not a good deal. So make sure that you're shopping those with other contractors before you agree to add that to your property tax.
This is an interesting question from Jennifer.
Hi, Jennifer.
Know if you're looking to hire anybody with mortgage experience.
Aw.
Absolutely. I'm always looking to hire good people that fit our culture.
So you've mentioned, you've also mentioned investing a lot, and you do a lot. You basically already went through the whole process of how you're thinking about getting your first investment property and thinking ahead. But there's other things out there too, like what about Airbnb, and what about this BRRRR method?
Ooh, I love the BRRRR method.
You do?
Yes.
What? And so what are the 4 R's? It's 4 R's, right?
Yep.
Okay.
It's buy, rehab, refinance, and repeat. So what that means is you're looking for a property that you can purchase that has the ability to rehab and create sweat equity. And, you know, a lot of what we're talking about here is the market really high? The best way you can protect yourself is by building sweat equity, okay? But once you actually put the sweat equity in and you rehab that house, what you're going to do is you now created your own equity in that, and you're going to refinance that property and pull all your money back out, because now you have equity in that property that you created on your own by rehabbing it. You get all of your initial investment back. So essentially you have no money down in the property. And then what you do is you rent it out to somebody. So they're now making your mortgage payment. You have zero money invested, and then you just repeat the process. So right now it's really hard to find a BRRRR strategy property here in California. A lot of people are going out of state. But during the last mortgage, crisis, it was extremely easy. Every single property would qualify for this. You buy a property that's under market, you rehab it, it now creates a lot of sweat equity. You pull all your money out on a refinance, you rent it out, you get free cash flow, and you keep going.
Oh, we just got this from Athena. Says, I inherited a home that was completely paid off, and I refinanced for some upgrades. I'm looking to buy another home. Would I still be considered a first-time home buyer?
You're considered a first-time home buyer if you haven't purchased a home in 3 years.
Hello there, Jay. Good morning.
Oh, good morning. I just had a question. I just listed my house for sale, and I was wondering if I have to pay capital gains and what that limit is. It's my first house.
So I'm not a CPA. You definitely want to ask a CPA. But the rule, I believe, is if you've lived in the home for 3 out of the last 5 years. But if this was your primary residence for the last, I believe it's 2 years. Yeah, more than 2 years. But you got to ask your CPA. That's just not in my field.
Hello, Mariah. Go ahead.
Hi. So I was hearing you guys talk about how first-time home buyers need to put down 3% and all that fun stuff. Well, what about the USDA loans? Because me and my husband just bought a house through a USDA loan, and we didn't have to put anything down. And I didn't hear Shelby say anything about that. I mean...
Well, he actually did.
So there's two programs that you don't have to put any money down. One is USDA, and those are rural homes. So that's a great product, and also a VA loan.
Right.
VA loan, you have no money down. But for everybody else, you got to put 3% down.
Some of our listeners can be very biscuity.
Oh, yeah.
Clinton says, just bought our first house and paying $50 more than the one we were renting around the corner in West Sac, just to the point.
Dang,
Of,
well, that's
great.
incredible.
Isn't that amazing?
Yes.
I saw this yesterday. I pulled this knowing you were coming on. A new bank rate survey yesterday said that 6 in 10 millennials have home buyer's remorse towards their first home. Between the ages of 25 and 40, they have regrets about their first home because they're either disappointed in the location they picked or they regret buying a home that was either too big or too small for their needs. That's a pretty high number, 2/3 of people.
That I felt the same way. And it's
Really?
location. Location over everything location.
Hello there, Kevin. Good morning. Kevin, you there?
Oh, good morning, Red Show. How you doing?
Hey, what's up?
Hey, quick question. So, I'm sorry if it gets a little roundaboutish. So, I had a buddy pull money out of his 401k and then got dinged on his taxes. So, would that happen if you pull equity out of your house? Are you going to get dinged, for the 2022 tax season?
No, when you pull money out of your house, you do not get dinged at all. That's one of the beauties about doing a cash out refinance. It doesn't affect your taxes, your property taxes, and it won't affect your federal income state taxes.
By the way, a lot of people are writing about the forbearance mortgage plan, and they wanted a clarification. Can you refinance if you signed up for the forbearance mortgage plan and or if you're in the middle of the forbearance still?
You have to make 3 payments back from the forbearance before you can refinance.
Hello there, Nick. Go ahead.
Yes, thank you. My wife and I have acquired 12 pieces of property from East Coast to West Coast as real estate investments. Our home that we live in here in the Sacramento region, we have been trying to refinance for 10 years, and we keep getting told no because we are multi-property owners. Is there any program out there that would help us?
Oh.
Yes, the thing that you're running into is that they don't want more than 10 financed properties, but there are portfolio lenders out there that will take that loan, so give me a call.
We got this from Tyler.
Hey, Tyler.
Says asking for a friend. I heard you say a late payment doesn't hit your credit until it's 30 days late. Is that 30 days after the 14-day grace period?
No, it's 30 days, in the month.
So if your payment's due on the first,
yeah,
you're saying it doesn't hit until the
first of the
following month.
Yeah.
Phone number is 888-989-9811. We're thefinancewithshelby.com, and we just got a couple more seconds here to talk about the market, and these emails are flowing in. This is just such a topic for everybody, and especially with everybody's feeling like overwhelmed. And one of the things I like about you is you do make them kind of calm and realize, no, you can do this. There are ways to do this. So you said in the beginning, start with a great realtor. Mm-hmm. Could they start with you, though?
Yeah, totally. You always want to get pre-approved up front. So you get pre-approved. You want to have a fast turn time. You want to have a lender that's in your local market because that's super important to people. And you want to have somebody that's really on your team that has connections with the other real estate agents. Because not only will your buyer's agent have connections with the realtors, but I do a lot of loans, so I have a lot of connections that can help you as well.
Why are you so able to beat banks all the time?
Oh, that's a great question.
I know.
So there's multiple layers in the industry. You have big banks, which really heavily rely, they kind of service everything. They rely on the walk-ins through the door. So they're going to be your most expensive source of the funding. But they're greedy. So they want every single client to come to them. So what the banks do is they offer independent mortgage brokers like myself the ability to get better deals for me to bring my clients to them. And it's called a wholesale channel. The only way a consumer can get a mortgage through the wholesale channel is through an independent mortgage broker like myself.
That's why it's called United Wholesale Lending.
Wholesale.
Holy cow. You were all wondering. Hello, Peter. Go ahead.
Hi. I own a home, but I don't live in it, and I can't get equity out of it. Is there any way to get equity out of it?
Yeah, you should still be able to refinance it as an investment property.
Oh, yeah, because I've talked to several banks, of course, but I've tried to, and they says no because you haven't lived in it.
Nope, you're good. It's an investment property.
Wow.
You should be able to refinance it. Obviously, you have to fit the guidelines. Maybe that's what they're referring to. But I can, at the very least, explain to you how to fit those guidelines so you can refinance it in the future and access the equity.
This seems to be a very consistent trend with a lot of the emails that I've been reading, the things on social media, is that a lot of people are just told no. Mm-hmm. And you seem to say yes a lot more, at least give it a try.
Yeah.
Because they seem to get shut down a lot right away by banks, by lenders, et cetera. Is that prevalent?
Well, I mean, honestly, everything goes with experience, right? And, the big banks, oftentimes, they have the least amount of experience in mortgage because the loan officers that work for the banks, they don't even need a license. They're under the bank's, license. So they're under their umbrella. So that's why it's really important just to go with somebody that you trust.
Well, the other thing I'm hearing from you, Shelby, that I really like is that if they can't do it then, you're going to give them a roadmap of here's what you need to do. It may take you 2 years, may take you a year, may take you several months, but here's what you need to do to get there. And I think some places, since you can't give a business now, buy out the door, see ya.
Yeah.
And so I think that's great. And I think a lot of these people aren't getting that. They're just not getting that extra step of someone telling them, well, here's what you need to do to get there.
So thanks so much for doing this, man. It was great to have you. We're going to have you back again because of the interest and obviously the entertainment factor. But people are just so desperate, and you're such a great help and a great voice for this. And thrilled to be partnered with you.
Thank you, guys.
You bet. Shelby Elias from United Wholesale Lending. Now you know why it's called that. And he's online at financewithshelby.com.